Okay, this is the screen that we're going to be using to trade the S&P E-mini off today. We're going to be using the 1500 tick bar chart, and we're only going to be using price, the price bars here, and volume. Now this is the volume down here, and this is the process trading proxy for volume. So we're going to be using this proxy for volume, which is the effort oscillator, and the effort oscillator simply tells us what is going on basically inside of this volume, the normal volume bars here. And as you can see, the effort oscillator has green and then red. The green effort bars are when the effort is to take it up, and you can see that as a trading cycle would take place, the effort of the buyers here comes in, and they come up to a point where they step aside through exhaustion or taking a break, and then it moves down with price, and so then the effort of them moves down, and so you can read inside of the volume bars what is happening. So we're going to be using this effort oscillator as the proxy for volume, and so we're going to be trading price and volume action only today. Now normally over at processtrading.com, this is our trading screen. Normally, here we have a 500 tick bar chart, the 1500, which is the main trading screen, and this is the 4500. We also use a 30-minute time frame over here, and then this is the NYSE 1-minute tick chart. We kind of use it as a oscillator because we put limits on it for 600 and 800 depending on when those limits are hit, and that gives us some information. Over here we see this is the effort oscillator that we'll be using today, and it's the only one we'll be using. Here's the momentum oscillator with the price momentum, and that's this tricolored line right here, and then the dashed line here is time momentum, and then finally this more solid line right here is the trade momentum, and that gives us because we know that price follows momentum and momentum follows volume, and so if that's true, then all we're going to be using is what originates the movement, which would be volume, and then price, of course. Here's the short-term trend oscillator. But for our purposes today, we're just going to be using this screen. It has the volume on it, but we won't be reading that as much as we will be using the proxy, which is the effort oscillator right here in price volume. So we'll take a couple of trades here, and we'll analyze them as they're going along. So right before the market open here, let's take a look at yesterday's from the aspect of simply price and volume. And so we'll move back a little bit here. Here's 2 o'clock. Let's get to, and this is close to 9:30 here. So now from the aspect of just volume, here we see that the volume is coming down. And within this volume oscillator, again, the green is the positive or demand type of effort. The red is supply or downward type of pressure. When you get a cyan color here within the down movement, that means that a demand is showing up even within the down moves, and that corresponds to, on the up moves here, the magenta shows demand, whereas the white, when it's when the histogram is above the zero line, the white would indicate more of a down move or a move down possibly in price. And if you get a white bar within when the histogram is below the zero limit in the supply side, then this demand means potentially, or the white bar means potentially an end of down. So we have those color codes, and then we have the red bars, which means potential change of direction. So we'll be using those signals as well. We'll be using the color codes within it. When we get to the gray bars, whether it's within the demand side or the supply side, the gray bars show a weakness in the demand or the supply being requested. So that's how we're going to read that. We see that coming in here. We see the price moving down. We saw weakness come in here in the demand side, and then it fell off to the supply came in. And then right here, we see that potentially some demand is taking place within the supply. So that there's a little battle here going on. And we see that the supply side bars, because we pay attention to the length of the bars as well, we see the supply side bars are diminishing, and so that the demand is potentially overcoming the supply, and we see that happening right here. So that was early in the morning. We'll continue on, try to catch up to today now. Here we see the same thing. We see demand came in. We saw weakness, potential move down. It comes down here. Supply comes in, but supply is kind of weak, is not tradable. Then it shows weakness, and now we see that demand is starting to come back in here, and price goes up. And as price goes up, the demand gets heavier because we see the effort bars growing in length. Then they start to trail off here, as does price. Then this suggests here that there might be an up move in price. That up move takes place here, even though this white bar shows that there might be a move down as well. So, and now weakness comes in here. So this is not a strong up move according to the volume. Again, I'll just say it's volume. We're using the proxy for volume, which is the effort oscillator here. Then we have some demand coming back in, but still the bars are very short, and they're gray, which means weakness, and that weakness finally breaks through right here and goes to the supply side as the sellers take over and price comes down. So that's a little analysis of some of yesterday, and now we'll just move on to today. And this is all pre-market, so we saw that there was heavier buying over here. Then it culminated right up here at this point, and now we see the demand bars start getting shorter. Here is a move down bar, or potential move down bar, and here we see weakness coming in. A little bit of strength here, as it indicates this would be a magenta bar, which would be a potential move up in price, which was right here, but the weakness continues, move down, or a potential down move bar right here. The bars keep growing shorter, so it's demand is getting weaker, and then eventually it takes over and it comes down here to supply. And right in supply right here, this says this could be the end of a down. So right here, we might be looking at that, as a support and a resistance point, and we can kind of see it in our price action as well. So that is some analysis of today. We'll take a couple of trades as the day develops, and so now we'll just see what happens as the market opens in a few minutes, and we'll continue with our analysis. In fact, we actually don't need this volume indicator down here. Let me shorten that a little bit. So we'll just leave it like that, I guess. Okay, it's just before the open here. As we can see, the supply side came in. It got weaker because the effort bars are getting shorter, and here is weakness within it. We do see it crossing over to the demand side with magenta bars here, but those are very small magenta bars, so it's not heavy demand. And now we would be looking at this, which is a normal demand bar being green, but it is small. In fact, it's shorter right now than even the prior bar, so it doesn't show great strength in the demand right now. So you want to balance that out. You might have a large up move with small demand, and that would tell you that even though there's the market opening, that would have told you that even though the demand was high, or the price went higher, the demand to do that wasn't backed up by strong conviction. Okay, so there's a potential move down. We see this price bar then had a tail to it. The bars are starting to get higher, So let's go ahead and place. Oop, there's a demand or a potential down bar. We'll give the markets a few minutes here. And you can see right now that the demand, it started to move down, now it's moving back up a little bit higher. But in general, it's kind of just moving laterally, so that's not something that we want to get convicted about right now. Especially what we would be looking for is the crossover points and the high and the low points. So there's a potential move down bar. Here's another potential, it changed. Okay, so now it is the normal green bar. Then it changed to weakness. Now it's potential down. So we saw a little bit of demand come here, and then the demand had some supply coming in to it. Then the weakness showed up to it. Kind of had a couple of dojis here, so there's kind of like a little battle taking place here. We see price moving up here in a strong fashion. Prices moving up in a strong fashion. Not necessarily is demand behind it moving up in that strong fashion, though, because we see these bars aren't increasing in size. So a little bit of effort is getting a lot of results, and that's not always strength. And so now we see demand again starting to fall off a little bit here. But here's a magenta, so it says potentially demand is going to go up. Let's see what happens in the next bar or two. Just followed right by a potential down bar. This line here is simply a bias type of line. If it's above the zero line right here, then it means that the effort is more positive. If it's below it, it means the effort is a bit more negative. And you can compare the effort here taking place during normal market hours to the effort over here during the pre-market hours. Much difference, although you don't see that showing up in volume, but you do see it showing up in the effort and the supply and the demand as to what they wanted to do in those pre-market hours. Now we're so we're at 9:30. 9:30 started right in this area right here, so that's where we're starting from, right in this area right here, and we're just watching the proxy for volume, which is the effort oscillator, and it's still to the demand side. So if we were going to take a short, we wouldn't step in front of this, and yet it doesn't have a configuration really of strength in demand. So if we did go with it, we wouldn't probably stay in it for a long duration. Now we're looking at price here. Here's the overnight, and assume that that's the high of the overnight. So now we're getting a little double top here in the price. So we'll see what happens there. Here's again, it's varying. We're going to have to see what it is when the bar closes. Now we see the demand kind of starting to incline upward again, but on the price we see we're getting dojis as well. So here we have a potential, we'll see what this is when the bar closes. If it's gray, it'll be weakness. If it's white, it's potential down. We see this little red underscore here, which again is a weakness, and the yellow underscore is a strength. So we had over here, we see that these white potential down bars were right over here, and then strength and the bar went back to supply. So if we got in, we could have got in right over here. Here we see demand or supply coming in over here. And now what we're looking at, we're just seeing that is demand going to be able to absorb this supply right here, or is this supply going to continue down? Is the effort going to continue down? Right now it looks like it is absorbing it, though it's still in a state of weakness. That's why we didn't just jump on these to the downside. We would have needed to see them break through and show some supply coming in. Here we see the bias. It's white here. Now it's turning green here, which is a more positive sign too. So, and we're watching the price action. We can see the bars potentially forming a tail. Here was a doji, so and this is a potential reaction to this double top right here. So here's our first sign of supply coming in. So this might reverse. Let's go ahead and take a trade right here.
Order filled.
And this is to the downside. And if this supply goes back to the demand side, we'll just get out right away. Here's a doji. Here's coming to the demand side. So this shows potential down move. We would like to see how tiny that is, how short that supply is. We would really like to see this type of configuration over here. And now we see potentially it's going back to the demand side, but we'll wait and see, what the next bar brings. Tiny bit of supply coming in, really not convicted to bring it down. And it also means that the buying is trying to absorb the down move, which it is kind of doing successfully here. So we're going to have to see what the next bar brings.
Order filled.
Okay, so that was trading off of that volume. And now we do see more supply coming in. That's what we wanted to see over here. We would have liked to seen that over here, longer supply. So now we could continue on with that trade because supply is coming in. But we're just going to step back for a second here and look for another trade. Again, when we see it coming down like that, we're looking for this type of configuration where it continues to decline. That's why we could have stayed with that trade, because we're looking for that declining continuation where the supply is showing up in stronger and stronger efforts until a point where we see that these bars start to then reduce in size. They start to incline, and then gray or cyan or something comes in and shows us that there's some demand within the supply side. Here we see it getting weaker a little bit. Okay, and here is a cyan coming in within the supply side, but it changed here. So we have to see what happens when the bar closes. Now remember, on the demand side, when you get a white bar, it means a potential down. When you get a white bar in the supply side, it means a potential end of down. So we're considering, is that the end of the down now? But we see that now that the supply bar has gotten a little bit longer again. So we're just going to wait for the conviction to see what is going to happen here. So we saw the prices come down. We got in right here, so we could have written it down. But also, as we look at price and what it's doing up here, we're looking at volume, or the proxy for volume, again, the effort. And we're watching as these bars develop, whether they're white or gray or they remain red. That is an indication to us of what's taking place, who's potentially achieving their objective in the place, whether it's demand trying to absorb supply or supply remaining with demand. So here we see that the bars are getting weaker, and that weakness came in. Here it showed us that there's a potential demand within the supply side, and that would be this demand right here. Right now, that's a potential, the white would be a potential end of down. But again, the FR bars are now starting to decline again. They're starting to get longer, so that means the supply is actually gaining in strength. If we were going to go to the upside, taking a long trade, we'd want to see these growing shorter. So we see it bouncing around here, up and down, up and down. And no matter how you want to look at it, whether it is the bulls and the bears fighting it out, demand and supply trying to find an equilibrium, or smart money moving the market, these should tell you to some effect of exactly what's taking place within the price and volume action. Now here's a potential end of down move, and now these are coming back in. It's getting shorter here. Let's go ahead and take a long trade here and see what happens.
Order filled.
Oops, we took it to the downside. Okay, so let me just get out of that trade. We actually wanted to go the other way.
Order filled.
We're going to cancel all the orders here. So this is the down order supply. This is in TradeStation. This is the matrix. This is where you would put in your sell orders. This is where you put in your buy orders. So if we would have put in our buy orders successfully, which is what I should have done, we would have put it in, and we would have stayed in it for a few minutes, and we would have got in right here and or right here, and we probably would be out already. So let me just go ahead and put that in. Oops. Yep, didn't catch it. So that's too bad. But that's the that's the way it should work. We were trying to get in because we saw that it just crossed the zero line with the magenta bar. This green volume bar was higher, which was associated with this bar right here. So this is right where we were trying to get in at the what level? The 27, even call it 2717 level, and we're up to 2019 level. So that'd be 2 points right there. Although we probably would have just taken a point for the exercise of today. But once you miss a trade, like I just did, I'm not inclined to chase it, even though it shows that demand is coming in, and it's fairly strong right there. So now again, just looking at this, okay, demand came back in, and so demand is coming in here, and these areas right here, these can be pullbacks too. I mean, so when we see demand falling off and the bars declining, we have to interpret that as well. Is it declining because supply is coming in, it's going to take it down, or is it just a normal pullback in an uptrend? and of course the reverse to be true for the downside. So you want to read that into the price volume action as well. You know what I should have done? I should have just left that sell trade on where meant to hit the buy and I hit the sell, and so that all the prices that were going against us, you could have seen that those would have been profits. But if you were just guessing and not knowing which way it was going to go, you'd want to guess to the long side right here, because you see there's demand here, and demand NARs are growing larger, and they're sustaining their efforts here. So if you were going to just take a wild stab at it, you would do it to the long side, because the demand right here is showing. Now, here's weakness coming in. It is, the gray bar indicates weakness. It is a little bit smaller. Here you can see a weakness in the underscore, so that also can combine your interpretations where you have a declining bar. It is weak, and it is also showing some weakness on this underscore here, and we see that in the price action up here. So this is, so let's call this a little minor trend here, right here, and so this is what we're looking for. So this is coming back, and now is this a pullback? Or is there, in fact, weakness? You know, because as normal trading takes place, there's going to be a run of buyers that comes in. And they're going to move price higher, because that's the way that the trading block takes place. Is the trading gets higher and higher until all the people that wanted to buy have satisfied their orders and everything. And then there will be some weakness coming in the buying, naturally, because they're stepping back, they're taking a pause, or else it potentially got exhausted. You don't know, but that's why you want to look here, and you want to keep interpreting. Is this going to be a pullback, or is this, in fact, weakness coming in? Now, one of the things we'll see, if it's a pullback, then these effort bars, even though they're showing weakness, they shouldn't get much lower, and they definitely shouldn't go to the supply side. So if this is a pullback, you know, the bias line should now start heading up above the zero line, and the effort bars, again, should not go below the zero line. Now we look at this tail on the price action, so that shows that there was some demand coming in there. Here is a potential move down bar, small. But one of the things that you're seeing too is the difference between reading the effort that's going on within the price of volume action and then just reading the volume alone. Okay, there's a quick and a large move down right here. We see it starting to just break below the zero line right there. Now at this point, as we would expect, here's a potential double bottom, and there could be like a doji forming here, because they're going to want to see who wins out, the supply or the demand. But the effort is clearly to the demand side, or the supply side right here. Here's demand trying to take it up, and now we see the tail on that. We see it continuing to decline. To go to the positive side or to take a long trade, we'd have to see these weakness coming in the supply or in the oscillator here. Here's the magenta, which means that there's some demand within this down move, even though it's being absorbed and being covered right now by the sellers. Okay, here's a larger supply move right here. So now we're going to see, is this candle going to stay green or is it going to turn red because of this large supply effort? No, that answered that. And here's even larger effort, and now we're seeing it take place. And so now we're starting to look at, well, what time is it? You know, now it's 10 o'clock. So we look at 10 o'clock, 10:30, 11 o'clock, 11:30. Those are critical times because you can often see changes in directions. You can see trend setting ups. That action that's going to be sustained is likely to hit its point in the pre-afternoon hours, so in the morning hours. So here we see a very short bar in the supply side, although now we have a white bar, and we see that demand taking it. Now this demand here may just be residual, and it may be these people trying to jump back in. We're still watching what the indicator is telling us. And right now, it's the bias is kind of below the zero line, as we can see right here. The supply is starting to absorb the demand right here, even though it is getting weaker because these bars here are clearly smaller than these. So it came down, the supply went down, the demand took it higher, then supply is trying to come back in right here. So we're just kind of waiting for a more clear indication. But again, just like over here, if you were going to just guess, you would have went to the upside. And here, because the effort is to the downside so far right here, if you're just going to guess, you're going to guess with a short trade. Okay, so we see that the supply bar is getting, and they're getting weaker here. So I don't know how it's going to go out. I would actually wait until a demand bar came in, but we're going to take a long trade right here. Let me cancel all those. And,
Order filled.
And we'll just see. And I'm doing that simply because one, I'm going to cut the video off pretty soon here, and we see that there was weakness came in here. The bar was short, and it went to the supply side or the demand side a little here. So we'll just see how this trade works out, and then we'll finish up this video. Okay, here's a little demand coming in.
Order filled.
Okay, so that's it. That's how you trade price volume action. You're trading price action using volume. And you can see how it works much differently when you can see the effort that's taking place within the volume. So that's what I wanted to show you. And if you if you want to see more of the other indicators that we use, here's what it would have looked like if we were using our normal trading. We would have seen like here's the momentum oscillator, and you can see that price momentum as it's cutting up through both time and trade momentum here. That's a clear indication for us, and you can see that that happens right at this point here, and then it takes off. Here it is cutting down through that. So, and you can see it's coming down, and then price comes down. So we have all these other indications, but sometimes, you have more than you can really digest and use. You can simplify it. You can use one. You actually should use the effort oscillator to look at and then coordinate it with the momentum. And then you can look at the price bars and the NYSE, all the other indications too, to help confirm that you are on the right side of the trade. So anyway, if you want more information about the indicators, anything, go over to processtrading.com. And if you have any questions or anything, there's a contact form at the bottom. You can leave a question or comment, or you can leave a comment below. Hope the rest of your week turns out well, and hope your trading goes well.